All right, in today's video, we are going to be talking about how to fill in a text file declaration. Now, most of you will come to Australia and you would look for a job, and for your job, your employer will give you few forms to fill in. One of the forms will be your TFN declaration, text file declaration form, and it's very important that you fill it correctly, because if you don't fill that form correctly, they can withhold your incorrect text, and it will impact directly on your cash flow, right? So that cash that you get on a weekly basis or a monthly basis, whenever you get your salary paid, it is going to impact on that. And I have had a few cases, some of my friends and some of my students came up to me and they told me they were getting text too much, or and then that was causing a lot of issues. So I want to make sure that you understand how to fill in that form correctly to maximize your cash flow. All right, let's get into the video. I'm going to start sharing my screen. First, let me start this video by saying that this is not a legal advice or a finance or a tax advice. You should take this advice as just a general advice from my experience and what I know based on my knowledge. How to fill in a TFN form or a text file declaration form, right? You want to understand why we want to fill it correctly, because there are two reasons. The employer may be withholding your tax incorrectly, or withholding a wrong amount, and you want to maximize your cash flow. All right. So the agenda of the video is we've got a few things that we will talk about in this order. First, we're going to look at the TFN form itself and how, what are the things we should be looking into and filling into the form. Then we're going to talk about Australian residents. So we will focus on one section of the form where it gives you three options. It gives you either you are an Australian resident, or either you're a foreign resident, or either resident, or either you are a working holiday maker. Okay, and the tax rates differ for all three of these. So we're going to be looking at different tax rates for all three of these. All right. So tax-free threshold is one of the sections that we will focus on. It's very important that you claim that tax-free threshold whenever necessary. And if you don't claim that, it's going to have an impact on your cash flow as well. Then lastly, we're going to be looking at a PAYG calculator and understand, how you can calculate your weekly pay or a monthly pay. All right. So this is our tax declaration form, right? So once you apply for a job, your employer is going to ask you to fill in this tax file declaration form, right? So section A is the section which is to be completed by the pay, which is yourself, an employee. And section B is to be completed by the payer, and the payer is your employer, all right? So you don't have to worry about that section. You just have to worry about your pay section. So the first one is your tax file number. You should apply for a tax file number if you're new to Australia. The first step is to apply for a TFN number. You normally get it within a week from a tax file office when you apply for it. And once you get that, you want to give that to your employer. Okay, if you don't have a tax file number, you can take the boxes below. Question number 3, 4, 5 is all about your personal information. I'm not going to go in detail there. You just fill your name, your address, your date of birth, and then 6, what are you getting paid? On what basis are you getting paid? Are you getting paid on a full-time basis, or a part-time employee basis, labor hire, superannuation, or annuity income stream, or a casual employment? So if you're an overseas, let's say overseas student in Australia, and you are working as a casual employee, you want to take a casual employee right here, right? Let's say in this example, you're a casual employee, all right? Now, the section that I want to focus here in this video is going to be number 7 and 8. Very important that you understand number 7 and number 8. In 7, it says, are you an Australian resident or for tax purposes, or a foreign resident for tax purposes, or a holiday maker? Now, if you don't understand what this is, and you're guessing and you're filling in a wrong way, you will be withheld a wrong tax amount. Okay, so you want to make sure that you take on the right right section here. All right. Now, who is an Australian resident? A lot of people understand that an Australian resident is a permanent resident. That's not the case. So we want to understand that the first thing I want to focus on here is the Australian resident. Now, if you read it here, it says generally we consider you to be an Australian resident for tax purposes if you have always lived in Australia, right? Always lived in Australia, or you have come to Australia and live here permanently, okay, if you're a permanent resident. Now, I have been in Australia continuously for more than 6 months. So if you've been here for more than 6 months, you're considered as an Australian resident, okay? Now, have been in Australia for more than 6 months of the year, unless your usual home is overseas and you do not intend to live in Australia. So if you're not intending to live in Australia and you're here just for other purposes and you just work here, you are considered as a foreign resident, right? And the last one, which is the most important one, I really want you to focus on this one, is overseas student. If you are an overseas student and has come to Australia to study and are enrolled in a course that is more than 6 months long. Now, let me give you an example of one of my students who was here and actually is here at the moment in Australia, and he's here for more than a year in Australia, and he was getting paid, but he was only earning $350 per week. And he came up to me and he was like, well, I earn $350 per week. I work part-time, but I get taxed, or my tax withheld amount is $114. Now, I said to him that can't be right, because I understand that 350 is actually a tax-free limit, and you shouldn't be getting withheld any amount on that amount. 350. And I said to him, you know, you have to look at your tax form. And the mistake that he was making, that his tax form, is that he was taking the foreign resident tax rate. So we will understand what the foreign resident tax rates are. But let me give you an overview of, if you're a student which is studying more than 6 months, you want to make sure that you are taking as an Australian resident, because you are considered as an Australian resident for tax purposes, okay? Now, let's look at what are the tax rates for Australian residents. Now, if you want to learn more about the tax rates in Australia, you can go to my video here. I've given you detailed information about the tax rates this year and next year in that video. Okay, let's look at the current tax rates for Australian residents. From 0 to 18,200, you actually pay no tax. So that's tax-free rate. And if you think about it, $350 that my student was getting per week, it actually comes to 18,200 per year. So he shouldn't be getting any tax withheld from his pay, but he was actually getting $114 withheld taxable income on a weekly basis. And I will show you how it was being withheld. And now from 18,000 to 45,000, you pay 19% tax in Australia. And if from 45 to 120,000, you pay 32.5%. From 120 to 180,000, you pay 37%. And from 180 and over, you pay 45,000. Those are the tax rates for Australian residents, right? So if you're an Australian resident, how you want to fill this form is, you're going to say, okay, I'm an Australian resident. You want to take this Australian resident for tax purposes. If you're an overseas student and you're here for more than 6 months and your education is going to take more than 6 months, you are considered as an Australian resident and want to take Australian resident for tax purposes, okay? And you do want to claim the tax-free threshold. Now, if you don't claim the tax-free threshold, you're going to be paying some tax. You're going to be paying a higher marginal rate for tax purposes. So you want to click that. But when can we claim? I'm going to cover that later, okay? Now, you want to click on this. Now, if you are not an Australian resident, you're either a foreign resident for tax purposes or a working holiday maker. Let's look at foreign resident for now. So in terms of foreign resident, if you're a foreign resident, if you're not an Australian resident, if you're not a holiday maker, you're considered as a foreign resident, your tax rates are different. You don't actually have a tax-free threshold. From 0 to 120,000, your tax rate is 32.5%. And that's what was happening to my student. He was getting paid 32.5% on 18,200 that he was making yearly, or 350 on a weekly basis. Okay, so that's 114 tax that was getting deducted from his pay, was because he ticked the wrong box. He ticked on a foreign resident box. And if you are in the same boat, if you have the same condition or same situation, you don't want to do that. You want to take on Australian resident, right? Because there is no tax-free threshold for these guys. And you will be paying 32.5% from 0 to 120,000. From 120 to 180,000 is 37%, and 182 and over is 45%, which is similar to what Australian residents pay as well. And this is current year tax rates. Okay, so going back to this form again, if you're a foreign resident, unfortunately, you don't have the tax free threshold. So you're going to tick on this box. Now, you must understand that if you're here for more than 6 months, or if you are an overseas student here who's going to study more longer than 6 months, you're considered an Australian resident, and you can claim the tax-free threshold. But if you're not, you can actually not claim any tax-free threshold because there is none available to you, right? So you can see here, it says answer no here if you are a foreign resident or working holiday maker, right? Now, working holiday maker is my third category that I want to cover. If you're a working holiday maker, right, what are your tax rates, right? So when are you a working holiday maker? You're a working holiday maker if you're on these visas, right? If you're on a subclass 417 working holiday visa, or subclass 462 work and holiday visa, you're considered as a working holiday maker, right? You do have a lower tax rate. So your tax rates are from 0 to 45, you pay only 15%. And from 45 to 120,000 is 32.5%, 120 to 180,000 is 37%, 120 and over it's 45%, which is similar to Australian resident. But you do have a lower tax rate, but you don't have any tax-free threshold, right? So if you go on the form right here, if you're a holiday maker, you want to click on this, you want to tick on this working holiday maker, and you have to tick on no. If you say yes, that's automatic no anyway, because you don't have any tax-free threshold available to you, okay? You want to make sure that you're doing that, right? But I know that from experience, a lot of you will be in a situation where you are an Australian resident and you want to claim the tax-free threshold. So what is the tax-free threshold? Let's just understand that. What is the tax-free threshold? Now, going back to this rates that I showed you, the tax-free threshold is actually from 0 to 18,200, right? So if you are earning from 0 to 18,200, you actually don't pay any tax, and you shouldn't be withheld any tax on that pay. So if you're earning 350 per week, which comes to 18,200 per year, you shouldn't be paying any tax on that money, and your employer shouldn't be deducting any tax on that amount, right? And you should be getting all $350 on your pay, and there should be none charged to you. This is all about cash flow, right? We want to maximize our cash flow. Cost of living is really high, so we want to maximize your cash flow, right? So that is what tax-free threshold means. Now, when can you claim it? This is very important to understand. When can you claim it? Now, it says only claim the tax-free threshold from one payer at a time, okay? So if you have multiple employers and you work for multiple employers, you can claim your tax-free threshold from one employer. Now, what I suggest is, and what is wise to do here, if you have one employer, claim your tax-free threshold from one employer. If you have multiple employers, you want to make sure you're claiming from an employer that is paying you the highest salary. Okay, so let's say you have two employers. Employer A pays you $1,000 and the employer B pays you $500 per week. You want to make sure that you're claiming the tax-free threshold from the employer who's paying you the highest amount, okay, which will be employer A in this case. You can't really claim it from two employers here. It says unless your employer total income from all sources of financial will be less than tax-free threshold. So what it means is that if you have two employers, multiple employers, and your combined income from all the employers is less than 18,200 per year, then you can claim from multiple employers. But if you know that your income is going to be more than 18,200 per year, you want to claim it from the higher paying employer. Okay. If you have one employer, no issues. You just claim from that employer. Okay. Now, lastly, I wanted to show you the calculator. Okay. So how do we calculate? And I will be putting in all the links in the bio, in the description below of this video, and you can access all the links. But how do I calculate my tax, my PAYG, my pay-as-you-go income? So let's say I make about $1,000, and how much tax can I claim? I mean, what will be withheld from my income, right? So let's say I make $1,000, right, per week. Let's say I make $1,000 per week, and I put that in here. Base gross weekly income, earnings $1,000, right? TFN, yes, you provided a TFN, and you are a resident. Let's say the first example we are going to cover, we are a resident and we're claiming a tax-free threshold. Okay. Study loans, this one we are not covering, but if it simply means, this section simply means that you don't owe any money to the government. And if you don't owe any money to the government, then you will just click no here or tick no here. Okay. And that's what it says in the PAYG calculator. All right. You don't really owe anything to the government, let's say. And there is no tax offsets, Medicare levy. I'm not going to cover that in this video. We're just going to focus on the tax file, tax numbers, and we just hit calculate. So it's going to give you how much tax is going to be withheld. Now, the amount that will be withheld from your pay is going to be $162, which is 16.2%. And your net pay is going to be $838. All right. So that's the amount that should be charged from your pay. Now, you can use this calculator and put in your weekly gross income, and you can calculate how much tax you should be paying now that you know all of this information. All right, let's just go back. Let's just hit restart, and we're going to do it one more time. And we're going to say, okay, this time, let's just see a case with $1,000. And this time, I'm actually not a resident. I'm actually a foreign resident, right? For example. You can see straight away, you don't have an option of claiming the tax-free threshold because it's not available to foreign residents, okay? Everything else remains the same. We're going to calculate, and we're going to see what happens to our weekly income. So the net pay now is 675, significantly lower cash flow than we just saw. And that's the mistake that a lot of students make, or a lot of international people make when they come here. They think that they're foreign resident, and if they're not Australian permanent resident, they think I'm not an Australian permanent resident, so I'm not an Australian resident. Well, you have to understand what an Australian resident means. Okay. So now this person is now going to be paying 32.5% instead of 16.2%, as it's paying 32.5%, significantly higher tax rate. So you can see that changes everything, and that changes your cash flow and your ability to spend that cash that you're going to get on a weekly basis. You're going to be really, really careful. You want to make sure that you're not being charged at a higher rate. And that's what was happening to one of my students. A lot of my friends have had this issue, and they came up to me, and I showed them this, and they were like, wow, this is crazy. So you want to know how this works, right? We're going to look at the holiday maker example now. Let's say you're a holiday maker and you are again making $1,000 per week, and you say, okay, well, I'm a holiday maker. You can see again, you don't have the tax-free threshold option available to you. Come down and calculate their taxable income, and you're going to see the taxable income is 15% now, right? So you can see we saw that the tax rate is significantly lower because it gets charged 15% on your payment on a weekly pay, you will see all of these details. It's only 15% charged for the working holiday visa, right? Okay, we're gonna restart this and we're gonna do one more example with you're an Australian resident, but you do not claim the tax-free threshold. Let's say you have multiple employers and you don't, or by accident, you don't claim the tax-free threshold. What happens then? How much tax do you pay after that? We're gonna look at that example. So let's say I'm a resident, but I don't really claim the tax-free threshold. And a lot of people make that mistake as well. They don't really understand what a tax-free threshold means, and they click or they take no in this form. They just go and they say just no instead of yes. What happens is that let's calculate their net pay, and they will be paying 28.3%. This is the higher marginal rate that will be deducted if you don't claim tax-free threshold. By your negligence, or by, let's say you have 2 employers and you just don't claim tax-free threshold, which you shouldn't. If you have more than 1 employer, you should be just claiming from 1 employer who's paying the higher pay to you. In this case, your net pay will be 717, right? A little bit lower, but a bit higher than working, a little bit lower than the resident who's claiming the tax-free threshold, but a little bit lower from the foreign resident income, right? So that's an example. You can play around with this calculator and see, how much cash flow you can get really. So I'm going to restart it. One more example I wanted to give to you. An example that we started with, an example of my student who was only earning, he was working part-time, he was only earning $350, which comes to $18,200. Exactly the same tax-free threshold amount per year. He was making $350, right? And let's say he was a resident because he was studying here for more than 6 months. He is a resident. He should ideally take a resident, and then as a pay claim, the tax-free threshold, he should say yes. He should say yes, right? He shouldn't say no. He should say yes, because he's claiming the tax-free threshold. That's the only employer he had. Now what we're going to do is we're going to check what happens to his pay. Let's calculate that. You see, his tax withheld should be 0, because he's a perfect candidate who earns only 18,200, and he shouldn't be paying, or he should be paying, he shouldn't be getting withheld any tax, because his pay is under the tax-free threshold, and he should be getting exactly, he earns 350 and he should be getting back 350. His net pay and the gross pay should be equal to each other. Okay, so I'm going to go back to that form again. I'm going to show you if that's the case with you. You want to fill in your details. You want to take Australian resident if you're an international student, so studying here more than 6 months, and you want to claim the tax-free threshold. Okay, so I'm going to stop sharing. That's all I had for this video. I hope it was helpful, and I'll see you in the next one. Bye.